Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Hope everyone's doing well today. Let's see. We have. See if we got any. No comments yet. Okay, so nobody, I guess, is signed on. So hopefully, oh, there we go. Okay. We are live here on YouTube. Just wondered if. Let's see. I just want to kind of give you overall market look today. The market is, it's kind of, and the Nasdaq has been pulling back, and so that's unusual. And so I want to kind of take a look at the first chart here, and that is, of course, the Nasdaq Composite. And again, we've had issues here with the Nasdaq Composite. We've had this, beautiful, um, we've had this beautiful ascent, and then we sort of topped out on the Nasdaq at the end of February. It's been down ever since. So that's kind of one of the things I kind of wanted to show you. The market has been selling out of the Nasdaq, and some of the other areas like the Dow are doing well, but the Nasdaq itself is not doing well. It pulled below this very, very key level here, which is of course the 50-day line, and it has pulled lower than that. Now it's still above the 200-day, but we do have a lot of stocks that are struggling right now, and just kind of wanted to show you some of them. Let's take a look at Tesla first on the list to kind of get a gauge here. But Tesla is down today seriously, and ARK Invest, which shows quite a bit of Tesla, is also down. So I want to show you this. It seems to be, we seem to have gotten some support, at about the 620 level. It's a little bit below that right now. We seem to kind of have bounced at 620. I do think that if it cannot hold this 600 level, probably the next stop is down to about 500. So we may have some shorting opportunities on Tesla coming up here. So kind of an interesting, interesting thing that's happening here. Now, I also want to have you take a look at the at ARK Invest, and I have a short on this one. And the people that have been watching my site know that I am short on this one. We've had a lot of selling going on here, so this is telling me that indeed we may have some issues here as well. It's down $2.14 today at 112. So this is also down. This is ARK Invest. A lot of people have been in this ETF, but it's showing a lot of weakness right now. So I think you have to be careful. I also kind of want to show you an area that I did move into today in the small portfolio, and that's Denbury Resources. The market is moving from the Nasdaq to some of the more cyclical stocks, especially the oils. I got in on this one today. It's up It's up about 4%. Denbury Resources is the name of it. Symbol DEN, and it's pulled up nicely. I do expect we're going to see some more strength in this particular sector of the market. So this is kind of what I have been seeing out there. So without further ado, thanks for holding on. Let's look at Palantir. Now, Palantir has been very, very weak as of late. So let's take a look. PLTR, of course, is the symbol for Palantir. Yeah, this one if you're down more than 7% on this one, I just think you got to consider possibly cutting your losses at this point, because we are below the 50-day moving average. So this is not looking good. Many of the stocks that were the winners from the last 6 months, like Palantir and Roku and something like that, have all starting to give up their gains. So we want to be careful. If you're down more than 7% in the stock, I really recommend possibly considering possibly selling. Let's see if it pulls down lower and see where it's going. This was a very promising IPO. I was in this one early, basically in this climax top, but then I was out when it pulled back down 7%. That's why I always typically, like when I'm going in, come in from the buy point and then move my stop loss up, and then eventually sometimes it'll pull back, and that's usually where I'm out. But I try to buy off the best base that I can and then move it higher. So this one has pulled back kind of significantly here, and so this has kind of been the situation where we have not done quite as well as we normally do. All right, let's take a look for some people that have been waiting on TikTok. Thank you so much for taking a look. Okay, let's see. How much percent of liquidity have you maintained? Well, here's the thing. Currently, I am about 78 to 79% cash right now. I have been shorting the market. I did do a short today, a very, very short-term day trade. I shorted 100 shares of Roku this morning, and then I closed it. I shorted at 300, and then I bought back at 295. I closed the short on it. That has sort of been. I have moved my portfolio to a short portfolio. This is this for everybody out there. Take a look at this. This is a chart of Roku, and again, I shorted at about 300. I let it move down to about to about 295. I closed at 295. You can see by this little mark here that I have, and then it has bounced back up. But I do expect some further weakness in Roku. This may present some other very good shorting opportunities going forward. And by the way, if you're interested in this kind of thing, I put out some of this content on my my free action trade alerts, and it's super easy to get in those. All you have to do is go to https://sendfox.com/Dallas Trading Floor, and to kind of give you an idea of how I'm trading. I also have opened up a Discord room, and we're going to give more information on that next week. But a Discord room, and that way it'll be easier to ask me questions, as sometimes it's difficult to get in on some of these broadcasts that I have, because the number of people. But that tends to be that we'll be showing that next week as well. So okay, so I'm looking through TikTok here. I want to thank everybody for taking a look, and let's see if we have any questions regarding the market. All right, all right, very good. Liquidity question. All right, here's a question on what percentage of cash you're saying. About 79%. That is the answer right now. So I do have a lot of cash right now. Okay, let's look at CLF and see if I can see anything here on CLF. Cleveland Cliffs. This is probably a very, very good one to take a look at. Let's start with the weekly chart. You can see that there's definite movement into this part of the market. There is a consolidation here from here to here, and we do have a buy point on this one, interestingly enough, at 1877. Currently, it's at 1638. Let's take a look at kind of the smell test. Boy, that's looking good. 94 on the relative strength. So that is very strong. The checklist is 66. That's good. And we have 402 funds in it. So I'm really liking that. It's 18. The sector is 18 out of 197. So that is strong too. So basically, the question is, where can we buy this if we're not already in this? Because I do think this is setting up nicely, to be a buy. Now the current the current buy point is 1877. It's up here, but I do believe that you can buy it right about at this level, because I think there's some resistance. So if it moves beyond this 1796, then I think it's a buy. So here's what I would do with with Cleveland Cliffs. You want to set a buy stop limit for CLF, and the where you want to move into it probably is right at about 1798 plus 10 cents gives you about 1808. So here's what I would do with Cleveland Cliffs. I definitely think this is buyable, but here's how I would buy Cleveland Cliffs if I was not already in this stock. I would set a buy stop limit, and what this does is that this will buy the stock if it moves above where this red line is here. So that's what I'm going to say. So I'm going to set an alert there for this, basically at the buy stop limit. You know, for the buy stop limit at this level, because I do believe, even though 1877 is the correct buy point, I think you can buy this before the correct buy point, but I think it has to move above the 1796 in order to be a buy. So I'm setting it 10 cents above that. So hopefully, as we see some strength, and we're seeing some strength now, you can buy it. And look at this relative strength line. It's pointing upwards. So the market is definitely rewarding some of these legacy stocks like Cleveland Cliffs. Let's kind of look at the industry a little bit to see if there's anything else that we can look at. One that has been showing an incredible amount of strength, and I don't think I've ever owned this company, but it's X, and of course that is U.S. Steel. So there you go. Look at the U.S. Steel. Now it pulled back today. Oh, no, I'm sorry. It's pulling back up. So this is kind of the group that you want to be looking at. I think Cleveland Cliffs is the better of the two. I think it's a little bit better than X, but I do think that both of these are decent. That's where you want to buy X, basically as it moves about above 24. So I'm going to set an alert there at that line, basically at at about 24.50 is where I'm going to be setting that buy stop limit order. But that amount right about there. If it pulls above that, then I think you could possibly buy it based on this chart pattern here. That's on the weekly chart. So let's look at the daily. Yeah, as you can see, right here we have this buy point, and the buy point is a cup with handle, so it's very good. 24.48. So where you would want to set your buy stop limit one, this is 10 cents above this, 24.56 is where you'd want to be if you were going to buy X, which is U.S. Steel. I think this is the sector that has shown a lot of strength, and so this is kind of area that you want to look at. But Cleveland Cliffs, I do think, is an excellent choice because we are seeing capital flow into this area, and that's a big deal when it comes to this, because with this, now what I'm going to show you here very quickly is the list of all of the of all the groups, and kind of see how it stacks up. So I'm going to do that. Bring that chart up here in just a second. Okay, and thanks for bearing with me. Okay, so here's what I'm doing. I'm looking to see which sector of the economy currently is the strongest. Is the strongest of the industry groups, and right now, this is the industry group ranking. So let me put that up on the screen here. All right, this is the industry group ranking, and I'm going to hopefully give it there. Hopefully it'll give me a ranking. Oh, goodness gracious. I have an alphabetical ranking right now, and what I'm trying to do is create a, come on. Doesn't seem to want to let me. Okay, there we go. So there we go. Okay, so now the number one group right now is, again, for all this week, it's Oil and Gas Royalty Trust, and that's been a very strong group. This is why I bought Denbury Resources today. It falls into the into the drilling group. It's now number 3 on the list. So here are the top 10 groups. Number 1, Oil and Gas Royalty Trust. Number 2, Canadian exploration companies, drilling companies, oil and gas, transportation by ship, retail department stores, and that's an amazing one, wholesale jewelry, oil and gas, U.S., and then consumer retail, which is interesting, medical product distributor, and mining. So it's very interesting. What I'm going to do here is I'm going to look at the U.S. drillers and just here real quick. And this is the U.S. drillers in the oil. This is sort of where the money's going, and the money is going to these people: EOG, PDX, DVN, that's Devon, Fang, Continental Resources, Cabot Oil, Chesapeake, those kind of companies. This is where it's going. Now, one I want you to look at is a smaller company. It's called Matador Resources, MTDR. And I kind of want to show you this chart because I think it's very good. It's just reversed off of the 21-day line here, and it's moving higher. Now it's only up 78 cents, but that's 3% because it's only a $24 stock. So I think that you might want to consider putting this one on your watch list. This one is definitely on my watch list currently. The symbol of this one is let's see. Oops, no. The symbol for Matador Resources, MTDR, Matador MATADOR Resources RES. GDR. So this is one that I think that you might want to take a look at, Matador Resources, and you might want to consider putting this one on your watch list because this has some good numbers, and it is moving higher. Also, it has a very nice checklist, 66. The ownership is very good, 349. Industry sector 7 out of 197. Now, the reason I spend so much time on sectors is because this is where the money is flowing. It's flowing from the NASDAQ 100. Those are the big cap tech stocks into typically these oil and gas plays. And right now, Matador Resources, it's a company right here in Dallas. And it's basically domestic production. It's doing quite well. I don't necessarily recommend it, but it definitely should be considered to put it on your watch list because this is kind of where the market is moving. All right, thank you very much. Let's look at PEP and see what's happening there. PEP. And that is PepsiCo. PepsiCo is always good in an uncertain market because, everybody likes their products. I certainly do. That's for sure. And, they do very, very well in these kind of, this is a tough market to trade right now. It's been pretty easy up until, last year was pretty easy. This year, not so much. This is forming a very nice cup pattern. It's not quite there yet, but it's moved above the 200-day line. It's going through this basing pattern, and it does look like we're seeing some strength finally. It's up $2, about 1.86%. So this is getting ready. This is not ready to go because it needs to go above the buy point. The buy point on this one is for Pepsi, PEP, is 186.77. So if you were to buy this, the ideal place would be above the 148.77 level. So I would buy this 10 cents above that at 148.77 plus 10 cents, 148.87. That's where I would buy this one. But it's looking good. Now it has a very weak relative strength, 23. But remember, it's improving. This is the thing. This isn't totally the end all be all. This number. What you have to look at is this little blue line. This is the strength against the S&P. So it has been going down, 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 down against the S&P. Now it's moving up. So this is showing strength, and this is the kind of thing you want to look at. The checklist is still very weak. It's only 44%. So I would watch this one. I would not buy this right now. Let's see it gain some strength up to the buy point on this at 148.77 plus 10 cents. That's your best place to buy it for this one would be 148.77 plus about 10 cents, and you're going to have a, pretty nice buy in this one. I do have faith in Pepsi. I think that no matter what happens in the world, people are still going to want their products. That's for sure. So thank you very much. That's a very good suggestion, because consumer staples, when markets decline, certain things tend to do well. Consumer staples is one of them, and Pepsi is definitely big in that category. So let's look at ESTE. Thank you for this question too. ESTE. By the way, everybody that's watching on TikTok, you can easily just type in questions. Just jump over to YouTube, and you'll see all the charts and everything that I'm working off of. It's youtube.com/Dallas Trading Floor. Earthstone Energy. So this is an oil and gas. I like all the oil and gas plays, as you well know. Let's take a look and see what this one. This has been pulling back a little bit. It looks like it's bounced off of the 50-day line. It's still got a relatively weak checklist at 44%. But here's what I like about this. It's in that industry ranking it's 7 out of 177. I very, very much like this area. The ownership is this is a very small company. So we only have 6 funds in it, so very small, but I do like the sector. Now, let's see if we can find something. Now, this one does have a very high relative strength at 93, so I like that. But this is a little bit concerning to me. Well, here is this selling like that. So this volume moving downward. So let's see if we could find something that's maybe in a similar industry that might give us a little bit better, numbers. This is the one I was talking about, Matador. I was talking about MTDR. This is also a small one, but I think this has a little bit better prospects than Earthstone. Nothing wrong with Earthstone, but I just think Matador, MTDR, I think this one really has some good stuff going. As you can see, it's off a little bit, but this has a little bit better chart in terms of it. It's also a higher relative strength. ST was a 94 relative strength. This is a 98, a little bit stronger. It's also got the checklist that I like, 66%. This is sort of my minimum, so this is kind of my good housekeeping seal of approval. It also is a bigger company in that it has 349 funds in it as opposed to about 6. So this is what really moves stocks typically, are the funds that are in them. And this one definitely has some pretty good fund sponsorship. Also, with Matador Resources, MTDR, as opposed to ESTE, you have this very strong cash flow. Basically, its return on equity is 4%, and it does have positive cash flow. It has had some lower sales last 3 quarters, but remember, the price of oil is strengthening, and when the price of oil strengthens, all this group will strengthen as well. So this is a group that you really, really want to consider to be in. What I'm going to do, I think, tonight is I'm going to put out a list of every high-ranking group in this list, and that'll be on the. I'm starting this new thing, this new Discord room, and I'm going to have that available here soon. But I'm going to put this out as free content on that tonight, and this is going to be the oils. This is going to be the best of the oil companies in this sector. So I'm going to try to put out a little thing on that tonight, a list, and of course it'll be free. Let's see if I can figure out how to get to the. Let's see if I can put up something on how to get to this list. Got so many things going on here. So basically, it's www.vinny.com/Dallas Trading Floor. And so basically what this is let's see if I got that right. Okay, so what I have is, this is my new Discord room here, so if I'm going to be putting some free content up there tonight. One of the things I'm going to be putting up there is this list of strong oil exploration companies that have a relative strength above 90. Okay, that are above 90 to take a look at, and probably some charts, because I do think that this is an area of the market where the market is moving. So, this is probably a place that we can probably make money outside of the Qs, because the QQQ, the NASDAQ 100, has been selling off. So, a lot of people are down there, and maybe it's time to kind of move to another location. And this is possibly another location. All right. So, any thoughts on the condition of the market for Monday? I do think we're going to see a further weakening in the market. I just do. We're currently in a market, not a market correction, but the market is under pressure right now. So many of the stocks that are in the Nasdaq have been selling off. As I indicated earlier when I came on, I shorted a Roku this morning. Now I covered my short. I shorted it when it moved below 300. I then covered at 295. So I was able to pick up some quick money there, but it's now back up. But there's a lot of weakness in the techs. There's a lot of weakness there. So what's happening is that the capital in the techs is moving over to the beaten down areas of the market, and one of the most beaten down areas, I believe, is the oils. And again, as I said, I bought a small position in Denbury Resources this morning, DEN, and I'll show you that. This is sort of a, it looks like a startup, as you can see, because it's just like this. But this was the buy point, and it's up very strongly from it. Normally I don't buy them. Normally I don't buy them like this, but this one was particularly good. I did buy this one today. It's up 9% today. So you can see this is the area of the market where much of the the movement is too. And again, I want to point out Matador MTDR in this category as well. The reason I chose Denbury as my first one is because it has a stellar checklist, 88%. And it's also looking very good. There's also a lot of funds in it, 229. And again, it's this 7 sector. This is the oil and gas, U.S. exploration and production, E&P. And there's quite a few companies in this area. This is where I think that there is a significant amount of capital, at least in the short term, moving to this area. So this is where I kind of want to concentrate on. And again, I want to share my list with everybody. So I'm going to put it out on the Action Trade Alerts if you're already on that. And also, hopefully, I'm going to be able to get, when I work these bugs out, and certain things I've had, it's kind of been buggy, is on my Discord room, which is this www.vinny.com/Dallas Trading Floor. This will be in the free content section, so don't worry about it. I just want to get this out there to everybody so that they can get a heads up, because I do think this is kind of where this is a place that the market is moving, and I want to share it with everyone that I possibly can. Anyways, oh great, hey, super, thank you very much for this, your opinion on GS and Ring. Interestingly enough, I know a lot about Ring. I happen to actually, along with my brother, I own some mineral rights in West Texas, and Ring actually has contracted in the past to drill it. So I know a little bit about that. This is a small oil and gas company based in Midland, Texas, and I thought this was a sure deal for an acquisition, but it didn't. It did materialize. So it is still independent, believe it or not. Yeah. Okay. This is I'm sorry, Ring Central. I was talking about Ring Petroleum. So apologize for that. But let's bring up Ring Central. I think Ring Central, it's unfortunately, this is the story of many of the techs. I've fallen and I can't get up. This is the 200-day line. It's just, it's tested here, it's tested here. So basically what I'm seeing in some of these is that these, are potentially becoming short candidates. Now, if it can hold the 200-day line, it's good, but here's right now. Right now with this one, and this is just a rule that I have, and it's over the years it has served me well. It's below 200-day line, don't buy. So if it's below the 200-day line, I think you got to be super careful. And Ring is definitely below that. RNG, and that's Ring Central. I was thinking about Ring Petroleum, different company. Thank you. I wouldn't buy this one. It's right now. It's traded until it gets above that 200-day line. I just think you got to be super careful. And I know this is probably for a lot of people. This is going to be tough because we've had such a market for so long in the techs that everybody is really accustomed to buying techs and only techs. And so it's not that techs are bad, it's just that they kind of got ahead of themselves a little bit. And so I think that, we're going to see some weakness there. So you don't want to buy into weakness, you want to buy into strength. That's the whole deal here. And with that, I think, I'm getting off my soapbox here, but let's look at Goldman Sachs. Of the money center banks, this is probably one of the best. GS is, has been very, very strong. After hours, it's down a little bit, but I think overall this is not a bad place to park money. I don't think it's going to be spectacular because the thing about the financials, especially the money center financials, they tend to track the overall market. So really, you're better off just buying the Spider. SPY, which is the whole index rather than just the Goldman. That's the thing about the financials. They tend to track the indexes very tightly unless there's something else going on. Also, earnings are in 13 days. So instead of buying Goldman, what I would recommend possibly is looking at the Spider SPY. This could be a short though, so I'm a little I'm a little dubious on this one too. But I think this will do fairly well. I don't really have any opinions on Goldman. The biggest problem right now that I see in the financials is the fact that we have still almost negative interest rates in this country, and it's just hard to make money in the financials. It's they're good areas, but it's hard to make money in the financials because the interest rates are so low that I think it's a real difficulty. Okay, thank you. Okay, Fubo had a good piece. What are your thoughts? Okay, let's look at Fubo. FUBO. And FUBO. Okay. FUBO is Fubo TV. And it's down. I'm sorry to say this is down a lot. It's still got an 86 relative strength, but it's pulled back. It's got a 55 checklist. This thing is a falling knife. I wouldn't be wanting to catch this one. Yeah, the industry group, it's falling. It's 56. It's not bad. I mean, 190, 56 out of 197. But would I be investing in Fubo at this point? Probably not. I just think there's better areas. Yeah, this is the daily chart. As you can see, we have unfortunately a pullback here. So. I'm seeing weakness in this one, so I think you got to be a little bit careful, a little bit careful. Let's look at FSR, and okay, there we go. Frisker, all right. Electric cars. Electric cars have not been doing quite as well these last few weeks because of the weakness in Tesla. Of course, this one. Also, Fisker and Fisker has great management, and they have a great deal with Magma, which is a company that it's kind of like Flextronics, or they basically make the car. So they've got some good stuff setting up. But I just can't get excited about this chart. It's a downward trending chart. It's moved up like this, but it's climaxing and then down and then climaxing down. So maybe this will bounce off the 200-day line, and then I might be more excited about it. But right now, I think you just got to avoid it. I don't see it being a very good alternative. It's got a 44 checklist, which is below my average. 70 funds are in it though. That's pretty good. This is the problem. It's falling in terms of its rank. There's 197 sectors in the economy, and currently it's number 100. So I typically like to buy in the top 10%, and that's not the case here. So as I said, most of the things right now that are in the top 10% are basically either the oils or retail stores, if you could believe that. By the way, I want to take a look at how Macy's is doing. This area was decimated, so this is sort of a value play. It's off today. So yeah, it's sort of off today. Let's look at Dillard's. That's probably the best in this category, and that's DDS. Okay, and it's off today too. But I want to kind of take a look at the sector. It's number 5. Yeah, as you can see, this is an area that has been seeing a lot of a lot of capital flows. Again, it's number 5 out of 197, so it's in the top. It's in the top. So right now, many of these areas are very good. Wholesale jewelry is very good. Department stores, believe it or not, are good, and consumer electronics, which is amazing because these were dogs for just so long. But you can see we're moving. The economy is moving. It's moving different. It's moving different, unfortunately. Thoughts on Verizon? Let's see. What's Verizon? I think it's VER. VER, is that right? I can't remember this. Okay. Can't remember what Verizon is. VZR, is that it? VZ, maybe? Can't remember. Verizon, VZ. I knew it partially. This is the epitome of a very boring stock. It's up today, 197. Of the telecoms, this is the best. It's much better than AT&T, and it's a solid stock. It does pay good dividends. This is kind of your grandma's stock. Everybody in my family owned AT&T before the split, and my brother actually worked for them. So I like this area. Very, very stable cash flows, but not very exciting when it comes to growth. 44 checklist. The ownership is it's very good. 3891 funds in it. But this telecom sector just isn't good. This is almost at the dead last of all of the sectors of the economy. It's 194 out of 197. So I can't feel any love here for this one. I'm sorry to be such a negative Nelly here. I'm not normally negative. But yeah, I don't think you want to be in this. Oh, VZ, thank you very, very much for that. Okay. Do you think the NASDAQ managed to come out of the woods? No. In a word, no. No. Unfortunately, we're going to see probably more pain in the NASDAQ before we see any good stuff. So basically, this is the chart of the NASDAQ currently, and it looks really great until you kind of zoom in on just the last few weeks. And the last few weeks have not been good. It sort of it made its high here at 14,175, and then it's kind of come down and then up and then down. So this is the pattern. This is a characteristic pattern of a falling stock. So not only this is an index, but because it follows the same rules. So right now the NASDAQ does not. You don't want to be in the NASDAQ stocks. You just don't. Where you want to possibly be, though, is in possibly some of the some of the Dows. Okay, so let's look at the Dow chart. See, the Dow chart's much better. It's essentially a rising chart, as you can see. It's kind of bouncing out. It's above that 21-day line. The problem is the Nasdaq is. What's happening is the Nasdaq is giving to the Dow. Also, in the S&P 500, this is the 500 largest companies. That one is doing fairly well. But remember, there's a lot of banks in this one. This is also doing well. So here's the thing. Here's the thing. I think you have to avoid the NASDAQ 100, which is the Qs. So I kind of want to show you what the QQQ is. The QQQ is an ETF that covers the 100 largest stocks that are traded in the NASDAQ. And as you can see, it has a similar chart to the to the overall composite, NASDAQ composite. So this is where you want to avoid, so this is an area that you want to avoid. Avoid NASDAQ 100 stocks for now. And that's really what you want to do. You just want to avoid those NASDAQ 100 stocks because they just are not looking good. This is represented by the QQQ. This is an ETF that has the 100 largest stocks. This is not where you want to be in the market. You don't want to be in this because right now the NASDAQ is giving up and the Dow is receiving. So that's where the capital is flowing to the Dow from the NASDAQ. So that's kind of the thing you got to look at. All right. Let's see. Good question. Teen Tech. What do you think about tech stocks? Well, yes. Here's the thing about tech stocks right now. You know, tech stocks, I mean, everybody probably here hasn't been, I'm trading a fair long time. I mean, longer than I'd like to admit, to be honest with you. But the tech area has been just a bonanza for the last few years. And many of the stocks that I like the best are in the tech sector. But right now, it's selling off. And a lot of the what do they call the normal economy stocks, the Dow stocks, the oil stocks, those kind of things, those are doing better. So that's where you kind of got to look. You got to, you kind of got to look. You kind of got to change with the times. Right now, many of the tech the tech sector is not doing as well as it's been doing, and so I think you got to be careful in this sector. I mean, you just have to be very careful, or focus on another sector return. Yeah, I think you really do. I think you have to work on possibly the other sectors, and I kind of want to show you, and I'll show you this again because I think it's so interesting as to where where things are moving in the market. Now, 6 months ago, tech was absolutely the place to be. Okay, the number one area right now in the whole market is oil and gas royalty trust. Okay, there's 13 stocks in there. It's number one. Now, 3 months ago, it was number 143. So it was in the bottom 3 months ago. Okay, so let's take a look and see kind of what's happened. The market is flipping. Oops. Let me go to what is the worst now. If you'll know, hopefully this will. There we go. So we're going to see what is the worst. Well, the worst right now. Look at telecom. That's why Verizon is a very bad buy because, it's 195 and a few months ago it's never been really good. But if we go down here, take computer software enterprise. Okay, this is a top performing sector, and this is, by the way, where Microsoft is. It's in this group. Now, 3 months ago, this was a top performing sector. It was an absolutely top performing sector. So 6 months ago, this was the number 8. This was the 18th one out of 8. This is the 18th best sector. Today, it's the 170th. So you see how far this has fallen? So that's why we want to go kind of where the big guys are going, the big whales are going. And the whales are going to these sectors, oil and gas Canadian, these kind of things. This is where they are. Steel, specialty alloys. Some of the telecom infrastructure plays are good. That's a sort of a tech. But mostly it's really boring stuff like radio and television and retail and that kind of thing. So what I'm going to do is I'm going to pick some of my favorite emerging sectors, and one of my all-time favorite emerging sectors is this one. It's the oil and gas U.S. exploration because there's 60 stocks in it, and this one is seeing a lot of strength. Finally, it's instead of going down. See, the NASDAQ is going up and then down and then up and then down. This is going down and then up, so it's different. It's moving different to the way it's looking. This has a number of stocks in here that I'm going to put out, and many of these, some of these are big, some of these aren't, but basically there's 60 stocks in this in this one. So that's kind of where I'm focusing, at least for right now. I'm either in cash, or the ones I'm moving into are the other sectors of the economy where the big capital is moving. So that's really all this game is about. It's about finding where the capital is moving and moving along with them. All right, what do you think about tech stocks return? I don't think techs are going to be good for the next while. So I know it's kind of hard. I keep repeating myself, but at least for right now, I think they're going to be weak. VWR. Let's look at that to see kind of what we're doing here. And okay, so this is Liquid Media Group. It's a Canadian-based company in the media space. Media space is pretty good. This is a 96 relative strength, so I like that. This is a very inexpensive stock, $3.48. These typically, cheaper stocks like this are harder to trade because they typically are more volatile. So they're hard to trade. So, but let's look at it anyways. Yeah, this has a very poor checklist, 33%, not a buy. So this and it basically has three funds in it. So it is spiking. I mean, you might be able to make some money on this climax top, but I just think it's too risky. I think you got to pass on this one, Levi. I think you have to pass on it, unfortunately. I just think it's too small of an issue, and it's too volatile. So just not a good thing. Let's look at KMPH to see if there's anything there. KMPH. Interesting. Develops proprietary drugs. Okay, so it's a $9 stock, so it's still under that $10. It does have a nice relative strength of 85. Let's kind of look to see on the checklist. Well, it's not that strong. It's sort of in the it's 55%. I'd like to see at least 65% there. Let's look at the industry sector. Yeah, it's 172 out of 197. So I just why buy a fairly good performing stock in an underperforming sector? Why not try to buy a superior stock in a superior sector? That's my opinion, because if you buy the best stock in the best sector or near the best sector, then you're going to get the best results typically. So that's another reason I bought Denbury today. It's in the oil and gas exploration group, and as you can see, it's a very strong stock. And this is the kind of stock that you might want to take a look at, because this is the kind of stock that's going to give you, at least for right now. It changes all the time, but this is the kind of pattern that you want to see. This is the kind of pattern you want to see, is up, up and away like that. That's the daily chart, but let's look at the weekly. Same on the weekly chart. This is the kind of stock that you want to be. It's up after us. That's not a whole lot, just 1 cent, so nothing really considerable there. But that's why you want to consider basically, possibly looking at changing your mindset right now. Yeah, it's a good place. Now, I do like DraftKings, by the way, because I do think online gambling is going to be huge. It's the thing that's going to save the NFL in my opinion, because I think that they've made some missteps. They're losing viewership, but DraftKings, that's going to be their salvation. DKNG. Now, Penn National had been a better stock than this one, but this is a very good stock, and I like it a whole lot. It has a very nice chart. It is testing the 50-day line here, but it's pulled up. It tested and it's pulled up. So this is a good chart. This is a good chart. Let's go to the weekly. Yeah, this is a very good chart. I have a little alert on this one, because I do think that the key level is about this $50 level, above it. So the question is, how do you enter DraftKings? I do think you could enter DraftKings right here at the 21-day line, because this is going to pull higher on Monday, almost guaranteed, because we've tested. We went down, we've tested, and we've bounced. And so I do believe it's going to move above the 21-day line. Here's what I would do with DraftKings. Here's what I would do with DraftKings. I would basically set set a buy stop limit order for DKNG at, let's see if I can get this right. Basically, where I would set it. Oops. Let's do that. Is going to be about 66.55. 66.55 plus 10 cents, or 66.65. That's where I would set my buy stop limit order to buy DraftKings. I do think this is buyable, and I do think we're going to get a reversal. I wouldn't buy it at this level. I would wait until it moves past the 21-day exponential, and then if it moves past the 21-day exponential, I would be a buyer as it moves higher. So that's kind of where I see it. So 66.55 plus 10 cents, or 66.65. That's where I would set my buy stop limit order for DraftKings. I do like DraftKings a lot. I do think it's showing in this market, which is not a great market. It's showing a lot of strength. 77 on the checklist. The ownership is excellent. A lot of the NFL owners that own the teams are in this one too. So I happen to know that. 526 funds in it, so very, very good. Fidelity Conference funds in it. So I really think this is an A-plus opportunity here, but I want to see it move above that 21-day line. It has a cup with handle formation, but it's sort of handling up here now. So I do very, very much like this DraftKings. I think a good entry point on this one, 66.65. That's kind of where I see a really good entry on DraftKings. All right. Going short on BB. Interesting. This might be a good short, by the way. And I do like shorting, as everybody knows. BB is... Oh, yeah. Now, here's the thing about shorting. Thanks, Troy. Here's the thing about shorting. I do think you're right. That seems like a good place to short because that is where the buy point is. It's at 969. So I think that that might be a good short. That might be a good short. But here's the thing: be very careful because these can have wicked short squeezes. So these can have wicked short squeezes. Fortunately, BlackBerry is fairly large float, so it's not as bad. Here's the thing: I would be very careful because we're only 4 days away from earnings. Here's the thing: you might want to consider is a bear call spread on it, but I don't know. But I can see where you would definitely want to short this one. Here's one that I shorted today successfully, and that's Roku. And I also have and I did short this one. I did short this one today, and it's up after hours, but I shorted it at 300. I covered at 395, and it's now back up to 306. So. I do think that this one, will see weakness next week again. But this rally here to 306, this is a short cover, and it will it will change to the downside. But that's a good one, Troy. I like that as well. Also, if you're looking for short ideas, one that I also like for a short is Zoom. And that's Zoom Video, of course, not ZMI, ZM. And this one I do think is a short. It's it moved up a little bit today, but it's yeah, okay. So there we go. After hours, it's just even. It was up today, but I believe that come Monday we're going to see this thing. Monday and Tuesday, I think we're going to see this one continue its downward motion, and it's below the it's below the 200-day line. It's below the 21-day line, and it's below the 10-day line. So this is looking like it's probably going to go lower. There is a little bit of concern because I want to see an increasing volume. This is decreasing volume, but but here's the thing: we have we have a movement up here, but it's on decreasing volume. So this is a weak pattern. This will probably break down next week. Zoom videos, ZM, and I'm going to be putting out hopefully some stuff on how to short that one next week. That's going to be some premium content probably for the Discord room, but I'm going to work out some potential shorts. Hopefully, I'm promising all this stuff that I'm going to do. I hope I get around to everything because I so enjoy it, but it's time consuming. Let's look at Will. Thank you for that. Visa, and of course that's symbol V. Okay, and out of the credit card companies, this is it's I know a lot about Visa. I owe them a lot of money. No, I have owed them. Fortunately, I don't owe them right much now, which is good. Um, okay, so we are at with a cup and handle formation, and we have definitely above the buy point. We're in the buy zone, but here's the thing: I don't know. This is a tough call. Here's the thing about Visa that I don't like to see. There is a lot of selling going on just a few days ago, about 4 days ago, and it made its peak here. So I think that this is, it's not going down that much, but this is weak. This is relatively weak. I wouldn't be going long on this one. It's got a 44 checklist. Yeah. So here's the thing, watch this one, but right now, Will, I just think you have to be super careful on this one. It's essentially in this kind of market, this one could move lower. So I would be a little bit careful about Visa. I would be a little bit careful about Visa right now. Let's look at thoughts on NFTs. Oh, no, non-fungible tokens. I really don't have anything yet. I'm still learning really about these non-fungible tokens. They're very, very interesting. But in terms of investability, I don't know. I can't really say. I don't have any non-fungible tokens. Maybe I'll make some. I don't know. But I can't really say anything on that because I really don't have an opinion. Let's look at XOM. That's ExxonMobil. And XOM is an integrated oil. These aren't probably going to do quite as well as some of the smaller plays, especially the U.S. Exploration Group that I think has a lot of potential. Denbury Resources, Matador, those kind of companies. This is a very good company, of course. It's got earnings in about 35 days, so it's pretty far out. But it does have a good chart pattern. It does have a good chart. Let me kind of show you the chart to kind of give you that feel. But it's been moving up and then back and then up and then back. So this is an ascending chart pattern, and it looks as if we have a reversal. So let me see if the reversal line would be right about there. So this is probably a buyable pattern, actually, believe it or not, because it looks to be coming above that 21-day line. Exxon probably is going to be doing well. It's got a few issues. It only has a 55 checklist. Again, I like to see 66. I like to see us a little bit stronger there. The industry right now is only 102. And the reason that's low, and the reason that the U.S. exploration is because this is an integrated oil company, meaning that they do both the exploration and they do the refining and they do the marketing. So parts of because they do it all, they're sort of more balanced and they don't quite benefit as much swings in either way. So here's the thing. These are not necessarily the best sectors to be in. As you can see down here, top industries in sector, the oil and gas royalty trust, that's number one. The one I'm really focusing in on right now, it has a 96 relative strength, is this oil and gas exploration. So here's the thing with Exxon. I think it's an okay company, but I do think that you have a potentially better company out there with with some of the other ones that are just more powerful. Marathon comes to mind. That's MRO. This is also an integrated oil company. It's smaller, but it has a better chart, and that's Marathon Oil. So this one isn't bad. It's got a 91 relative strength here, and so the oils are definitely a place to look. The integrated oils I'm not liking as much as the exploration But thanks for bringing that up. That's very, very good. All right, we have a question on gold mining. Now, the gold miners, this is a crazy section too. There are some very good ones in this area. Of course, one of the best symbols of all time is symbol GOLD, which is a mining company, gold mining company. It's Barrick Gold, and I want to show you their chart. Haven't you know? It's funny. You would think that the gold miners would be doing better than they are, but they're not. It's sort of below the 21-day line. So my favorite company in this area is a company called FNV, Franklin, Nevada. But it hasn't been doing all that great as of late, but it looks like it may have turned up, which is very nice. So I might be back on the watch list here with this one. We may have turned the corner on this one. You can see this is basically the trend line, but it's really kind of too early to tell. With the gold miners, for some reason, you would think they'd be doing better than they are, but they're not. That's because inflation hasn't really set in yet. When it does, I'm sure that we'll do better. But right now, I can't really get excited about the gold miners. There's another gold miner, though, that I kind of want to take a look at, and that is KL. This is Kirkland Lake Gold. It's a Canadian company. It's very good. They've got some very, very good mines, and but it again, it just doesn't have a really good chart. I mean, look at that. It's not really good chart. Well, let's see if it gets to thoughts on AMC. Let's take a look at AMC, because AMC is sort of the Reddick special, and it's okay. Well, it may be a short once again, I'm afraid. Oh, it's so painful. You have these blow-off tops, which this is caused by short squeezes, by the way. And then you have coming up here, and then look and see. I put in I had a line here. This is where I was indicating to set a stop loss, because I kind of feared this would happen, and indeed it did. It just pulled up above that, it felt resistance, and then boom, down. So it does seem to be holding the 21-day line somewhat. I would just be super careful about investing in AMC. I think it could get really taken here. That's my humble opinion. My humble opinion. Oh, thanks everyone for being so. Oh, we've got one more question. I'm trying to get to everyone because I kind of I didn't have the slides this morning. AZO. I think this is Insure. I believe AZO. I'm trying to remember. No, AutoZone. Look at AutoZone. AutoZone is doing good. Yeah, see, this is the odd thing. Some sectors of the economy, like tech, just are pulling back. AutoZone is looking pretty good, pretty good. I really like this chart. It's a little extended above the buy zone. The buy zone is 1297.84, but it's looking pretty strong. AutoZone. Let's see if we have an alternative to AutoZone. A little bit pricey for me. Here's one I kind of like. It's not a tech, but it's a tech. Not a tech, but a tech. It's called Parts.com, and PRTS. And this is one you might want to consider, because I think here's the thing. It's pulled back a little bit, but here's the thing about recessions and auto parts. Interestingly enough, auto parts do very, very well in recessions, and I suspect that we are coming into a recession. Unfortunately, I wish we weren't, but I think that once the sugar high of all the stimulus money wears off, then we're going to probably pull back a little bit. Auto parts stores do great in this, so this is one you might want to look at. It's got a high relative strength, 94. Now it's pulled back a little bit. It had a buy point. And it didn't fail. It failed at 1729. So this is one I think you want to put on your radar. If this thing moves above the 200-day line, if this thing goes down and then it reverses up, then you might want to consider buying this one. But right now you can't buy it because it's below the 200-day line. But these stocks do very, very well in recessions. It's got a 66 checklist, and the ownership is very, very good. I mean, it's got 210 funds in it. On the industry sector, it's terrible at 157. But remember, this is an odd sector because it tends to do well in bad times. Wholesale auto parts tend to do well. People fix their cars; they don't buy new ones. So That's my feeling. But I wouldn't buy it right now. But it's definitely a watch list. That's one you might want to look at as opposed to AutoZone. AutoZone is a great company, but it's $1,200 a share, and I think you get more bang for your buck with CarParts.com. Anyways, I will be back on Monday at 2:30 Central, 3:30 Eastern. Oh, one last question. Oh, okay, on UPS. Let's do UPS last. Thank you for holding on. Let's do UPS. This is probably the last one for today, and that's UPS. And fairly flat. It was up $8 today, which is very very good. Rating is 47. The problem with this area is just not the best. Air freight is one of the worst groups. It's 195 out of 197. I just can't get too excited. This is a great company. I just don't think it's a great investment. How can I say that? I think that UPS is an incredibly well-run company, very very excellent. But I'm not. I wouldn't be an investor in it. I just wouldn't be. I think that there's, profitabilities are issues. I think there's other places that you could look that are better than that. Nothing wrong with the company. I love UPS. I use them all the time. I just don't think they're a great investment right now. I just don't think they're a great investment. Well, thank you, everybody, again. And I'm going to be, if you want to get all the action trade alerts, this is free, of course, and that is, it's free to subscribe to at sinfox.com/Dallas Trading Floor. This is the free action trailers. You can also go to the website and sign up at www.Dallas Trading Floor. I have a Discord room that's brand new. You might want to check it out. I do have some free content there too, so it's not everything is pay. Matter of fact, very little is pay right now. Mostly it's free, and that's Vinny.com/Dallas Trading Floor. That's where the Discord room is going to be. So maybe you'll check it out and see if you like it, and hopefully we're going to get some more, good content on there to help everybody make money. So until Monday at 2:30, thanks, and happy trading, and be safe this weekend. But it's looking nice. The spring is sprung, so I'm pretty excited about that. Thanks again.